Good morning, everybody. It's Richard Miller here doing my top quality stocks big picture market review. It's the 22nd of September. In view of the recent price action, I thought I'll highlight it. Let's look at the market pulse, what's going on right now with the indices. The Nasdaq Composite, as we highlighted in the early September webinar, was a little bit extended and moved into profit-taking zone. Market sold off, tested the 21-day and 34-day moving average, sliced through that, sliced through the 55-day, and then moved into correction territory. We've had numerous market distribution days here, as highlighted by these little spikes, above average volume selling, and that alerted you that the market is in trouble. Since the market is now below the 55-day moving average, it is in a state of correction, and it needs to regain the 35-day moving average for us to be bullish. So we remain bearish for the time being. Short-term swing traders can look at any type of support. Market tested, very closely tested the 89-day moving average. Yeah? So there's a possibility for a swing trade back up to see if the market will get back up to the 55-day moving average. But we do need to see the Nasdaq above the 55-day index moving average to be bullish. Now, a key thing to remember is we're not buying any new stocks. You have tighter stop losses on existing names, and you add stocks in your watch list that are pulling back the 55-day average, but we don't buy any new stock ideas if the market is currently in a correction. So we need a confirmation rally now. We need above average buying with a volume spike, so something like this little green spike here. We need something like that to come through in and around these levels. So as long as it's below the 55-day moving average, cash is about the best place to be. The Dow also below the 55-day moving average. Looks like the 89 got very close, if not rebounded from the 89 there. We can see there very closely. So it's really critical to see if the market's going to continue this rally. It needs to close back above the 55-day moving average, but we've also had quite a lot of market distribution days, multiple there, which alerted us that the market is rolling over. Nasdaq 100 very extended, moved into profit-taking zone, got out, tried to buy the 21-day moving average rebound. That got stopped out. 55-day support failed, and we got very close to the 89-day, literally a few points away from the 89-day moving average. Let's see. Now there's some favorable price action. The volume is a little bit light. So what we need to see here is for a new market rally to be confirmed with a market accumulation day here, a huge spike above average volume plus a corresponding price increase. Okay. So as long as the Nasdaq's below the 55-day moving average, the market remains in correction. We're not doing any new buys. For the adventurous trader, you can keep shorting the market to the downside or try and trade a quick retracement back up to the 55-day or the 21-day moving averages up to there. But so far, the risk is on high-risk trades, and as long as the market is below the 55-day moving average, we're not getting involved in the market at all. S&P 500 index, successful rebound from the 89-day moving average there yesterday. We need to see a follow-through in this. What we're looking for here is another market accumulation day rally, above average buying. It needs to outdo the market distribution days here, where we had above average selling, huge price drops on above average volume. We're below the 55-day moving average, so the market's also in a correction. So the corrections can last a little bit longer. There is downside risk to the 144-day moving average, so be aware of that. The market is not quite in good shape, but still had a tremendous rally from the April lows here, where we got a market accumulation day here, got the confirmation of the rally there, and that gave us a return of, if you didn't sell out, then 33%. So far so good, really. Consolidation, healthy market correction, consolidation underway. The index was very extended from the 55-day moving average, and now it's just correcting. Critical to see what this week will bring in terms of accumulation day, market accumulation day, where we're looking for a huge spike in volume and another big up day in the market. Okay, so that's what we're watching out for. Until next time, happy trading.